Eric Muathe with Muathe.com. Now, over the last month or so, we've seen this stock explode. That is BIOC. And it's jumped from about 74 cents, 75 cents to the highs recently of about $3.40. So we are talking a huge chunk of profit here. And we're talking about 350% move in a couple of days. Here to here. Now I've noticed a lot of interest in this stock, and maybe it makes sense to watch it in case it has another secondary explosion. Who knows? Alright, so this is the 6 months daily. Let's take a look at the 1 year daily so you can see what it looks like. On the 1 year daily, of course, you can see the stock has been spiraling lower and then lower, settle down, and then we had this recent spike. So what is the next potential big trend in this name? Now, one thing I have to stress, and it bears a lot of research, and also you can go take a look at many charts, and you'll find that whenever a stock is trading below 30.9, I've been saying this for the longest. Now this is the monthly chart for this stock, all data monthly, and take a look at the last time it was above 30.9 on the monthly. We can say it was somewhere here. So let's call it in the lower double digits, $10, $11, $12 range. If you did not pay attention to this aspect of trading, that you need to avoid stocks trading below 30.9 on their RSI, then you would have been caught up in this huge slide from $11, $10, $12 all the way here to under $1. And all you had to know was to stay away as long as the stock is trading what? Yes, below 30.9. So right now, even with the recent spike, the RSI has not moved above 30.9. So the biggest risk here is this stock does nothing. Now, I have to qualify this. If the stock is to stage a massive explosion, it has to trade above 30.90 on the monthly, otherwise it is gonna fail. Now, one thing I need to stress here is visually, you'll notice as of right now, the stock has a tendency of losing gains. Take a look at all these drops. They are all after here, for example, it had a nice month, but give back the gains. Dropped here, give back the gains on this month, give back the gains here, give back gains, give back gains. In fact, it's pretty much been a downward moving instrument. In fact, even on the monthly chart right now, in spite and despite the recent move, take a look at the last month of January. It gave back all the gains and closed well below January's highs. So we see it trying to move this month. Of course, it's February 2017. It's trying to move, or at least to be consistent with its behavior. Chances are, especially, and this is the key here, especially if it cannot move the monthly RSI above 30.9, expect it to fail. So if it can climb above this threshold, and I'll have a link in the description explaining where this number comes from and go into more details why this number. But if I was to make it a quick explanation, 61.8 divide by 2, what do you get? You get 30.9. So even though most charts are going to give you RSI 30, I can assure you this is the number. It's 30.9. So if you're going to play this, one thing you might want to consider is the recent weekly closing high. Now, even on this weekly chart, take note of all these situations where the stock gave back the gains. It has a tendency of doing this. And even here. But why not we be positive for a moment? So if the stock is to do well, a couple of things have to happen. We've seen that it needs to move above 30.9 on the monthly if it is to stage a further move beyond the recent highs. So that has to take place on the monthly. There's no No question about that. In fact, on this weekly chart, we can see evidence of this. Take note, the stock did not do anything. In fact, it kept losing ground here while the RSI was below 30.9. It is only after it finally managed to move back above 30.9, which is here, that it suddenly had this explosion. And before that, it had gone below 30.9 here. Let's call it at about $1.50, $1.60, somewhere in that range. So it stayed below 30.9 and continued dropping. So similarly, the monthly RSI needs to move back or needs to recapture the level above 30.9. Otherwise, all this breakout move and all this attempt to move higher is a trap. But I'll say this. Let's say the stock has intentions of moving higher. What you can do is use the recent weekly closing high as your line on the sand. So right now the stock is breaking out above the recent weekly closing high for 2016. That number is at $2.09. So as long as the stock is breaking out above that number, one can own it with the idea that if it moves back below $2.09, that you can get out of that position. So as long as it is above 209, one can play the potential, any potential to the upside, no problem. And at the same time, if it fails to move above $2.09, that is your cue, or at least a signal, that the market does not favor the stock moving higher. Now if we take a look at the daily chart, and so that we can see it clearly, I've zoomed into the 6 months daily. You can see that the recent daily closing high is here. And we can also set a future alert should the stock at some point ever move above 2.71. Now if it could break out above the recent daily closing high, that would be a signal of intent, and that would also suggest that the monthly chart RSI has moved above our 30.9 number. So either way, you can either use the recent weekly closing high, and here is the 1 year weekly chart. So I can just show you what we are doing here. So one can own this, knowing very well the stock has a history of losing gains. Anything above 2.09 on the weekly is a weekly breakout, and on the daily we can set a future breakout alert at 2.71. Now all those are considerations. We'll see how things go. Chances are, go back to that monthly chart, and you can see here the fundamental error in owning this stock, quite frankly, is right now the fundamental error is that the stock continues to trade below RSI level of 30.9. Eric Muathe with Muathe.com, as always, keeping you posted. Good luck, peace, and blessings. E-C-S. Whoa.